Here we are, October 28th, and we finally have word on the direction about this infrastructure bill. As it turns out today, Biden did announce that an agreement has been made that will include EV tax credits. So although that in itself is great news, there is potentially some bad news here as well. So we've been talking about these EV tax credits for quite some time now, and we've been making progress throughout the year. So it's definitely been interesting to see how these bills have evolved over time. So our last update, not that long ago, we talked about the House bill being the front runner, and it's turning out the House bill is probably going to be what we're going to see signed into law. There are some changes to that since the last time that we talked about it, so we're going to go through that now. In addition, one of the biggest open items is this a retroactive bill? And I have your answers right here, so we're going to dive into those details right now. So here's how this is going to work. The $7,500 tax credit that phased out after 200,000 vehicles is now officially losing its cap. So $7,500 will be the base tax credit for all EVs here in the United States. Now this is going to continue for 5 years. At the end of that 5 years, the $7,500 will remain for 5 more years, but now only for cars built in the United States. So this is a really good effort to try to help bolster US built EV cars. Now on a much more controversial stage, these bonuses that are going to be added to these tax credits. Of course, the very large one that we talked about last time is indeed in this final language. $4,500 will be added to any car that is union built here in the United States. So all union built EVs would get an additional $4,500, making it a $12,000 tax credit. In addition, there is that $500 boost as well, as long as the battery is built with 50% or more components here in the United States, bringing your total to $12,500. So cars like the electric Ford F-150 that are coming very soon, that will definitely qualify for the entire $12,500. There are a couple of other union built cars here in the United States that will also qualify, but it's a very small list of cars that are going to get that full $12,500. As for Tesla, of course the car is built in the United States, so $7,500 base credit. The battery itself is also made here in the United States, so there's an extra $500, but of course Tesla is not a union factory. So what that means is Tesla cars are going to be capped at $8,000 credit. So they're going to have a $4,500 disadvantage as compared to union built cars. But in reality, there's only a few cars coming anyways that will be able to qualify for that entire $12,500. Most cars that are on the road today are either only going to get $7,500, and then very few of them will get that full $8,000. Now we do have some more clarification on those caps for MSRP. So it looks like the caps are actually going to be about the same as they were last time. So here's the breakdown. For sedans, it's going to be $55,000 maximum MSRP cap. Vans will be capped at $64,000, SUVs at $69,000, and trucks at $74,000. So there's a lot of vehicles coming very soon that are teetering on the edge. So let's talk about those first. Specifically, I'm talking about the Cybertruck. Now, Tesla did just remove prices from their online configurator for the Cybertruck. Before these prices were removed, the base model was $39,990, the dual motor was $49,990, and the performance was $69,990. This is really important because at $69,990, we're only $4,000 away from the maximum cost. So if you ordered it with full self-driving, you're going to need to remove full self-driving from that package to make sure you stay under that $74,000 threshold. That's assuming Tesla does not include additional increases in the price of the truck by the time it launches. Another really important question and answer for you, is the Model Y considered a car or an SUV? Well, here's the good news. SUV classification is a very broad classification. So on my registration here in Indiana, the classification code does show that this is an SUV, and I believe that you're going to find the Tesla Model Y does qualify under the SUV status. And of course that is a huge win because instead of a $55,000 cap, you now have a $69,000 cap to work with if you're ordering a Model Y. So a performance Model Y is going to be eligible for $8,000 tax credit. Of course, this will exclude the other Tesla vehicles like the S and the X as very high premium cars, as this bill should have limitations. The other good news here is the income limits that we talked about previously are indeed staying in the bill. So for individual income earners, you cannot earn more than $400,000 to qualify. For head of household, it's $600,000, and for joint filers, it's $800,000. So these income limits are very high, which is good, but they're also not above a certain level to make sure that the most wealthy people are not qualifying for these tax credits. But the good news is, almost everybody who's out in the market to buy a car within these limitations is going to qualify for this tax credit. The other thing is, this is a point of sale tax credit. So you don't have to have a tax liability to get the full credit, which is something that has always been an issue with the original tax bill. Originally, you had to have income and tax liability that at least was $7,500. If not, your credit back would be limited by the amount of taxes that you owed. So everybody gets the full amount, which is great news, and it does not matter how much tax liability you have. One of the other things that has been wrapped up in this big bill is there is indeed going to be a tax credit for used EVs. Now, there are some interesting rules on this, but let's cover those really quick. The car has to be at least 2 years old, and it cannot exceed $25,000 price. And with that, you will get a $2,000 tax credit for the purchase of that car. So instead of $25,000, it'll be $23,000. But in addition, if the battery pack is at least 40 kilowatt hours large, you will get an extra $2,000 bonus. Now, if the car is built in 2027 or later, it has to be a 50 kilowatt hour battery pack. So if it does qualify for that, you'll get an additional $2,000, at least how this bill is written. So you can get $4,000 off a used car. That means for a $25,000 car, you're only gonna pay $21,000, which is great. Now, the income limits on the used market are a lot different. So it is $75,000 for individuals, $112,500 for head of household, and $150,000 for joint filers. And now, with all of that said, this is probably the worst news of all, and that is the effective date of these tax credits. These tax credits will not go into effect until after December 31st, 2021. So this is not a retroactive bill, which is heartbreaking. And there's a couple of reasons why that is such a shame. Number one, for the rest of the year, if you have an order in for a Tesla or any other electric car, you need to either cancel it or put it on hold immediately. You are throwing money away by taking delivery of your car right now. It's almost November, so you only need to wait 2 more months to get an extra $8,000 off the price of the car. It's absurd. So what does that mean? It means all these manufacturers are going to sell almost no cars. Demand is going to fall through the floor, and all the players in the electric automotive industry are going to be hit big time. Now, of course, the big players don't really care about that because they're not big EV makers yet. So this isn't going to impact them as much. But Tesla, who relies 100% on electric vehicles, they're going to be hit very hard. So again, if you have a Tesla on order and your family household income is less than $800,000 or $400,000 as an individual, you are making a huge mistake by taking delivery of your car before next year. Now, this is also going to create some issues come January 1st because everybody's going to want their order in by January 1st, and Tesla's going to have to figure out how to navigate the rest of this quarter. I really think that there's going to be a big impact to sales for the rest of the year, which is not good for revenue, not good for profit, all those things. But next year, everybody is going to want to get their hands on an EV, which is a good thing. But unfortunately, by delaying this till next year, this really hurts the industry as a whole. Of course, nothing is guaranteed, and this bill is not signed into law. This is basically the framework that they've agreed to, but hopefully there's enough voices in Washington to bring this one oversight into view. This should be either a retroactive bill or effective upon the date of signing. So something needs to change, otherwise all EV sales are going to come to a complete halt. So let me know in the comments, do you have an existing order right now, and what are you going to do? If you don't have an order right now, are you planning on waiting till January 1st to make that order? Let me know in the comments. For those of you who don't think you're going to get the EV tax credit for whatever reason, you just lucked into getting a 10-month lead time car car in a matter of probably a couple of weeks. I hope that you enjoyed this video. If you did, of course, give it the thumbs up. If you haven't already, of course, subscribe to the channel as we continue to post content regularly. You can follow us on Twitter and Instagram at Bearded Tesla. Thanks so much for joining us, and we'll catch you next time.